Hello, good afternoon, good morning, good evening to all my YouTube viewers around the globe. After a long time, I'm coming up with an English video, and the English version of our videos have been requested by many subscribers, around the globe who are who are not comfortable with Hindi. So there were a lot of time constant. Holding me back to compile these videos in English, but somehow I am trying myself to push a bit more and come up with the English versions of all my videos that are on YouTube. So one by one, I will try to bring them, bring all the videos in English, right, to you soon. So let us start with the first and the most basic and the most important topic, that is the candlestick, right? So Candlestick Mastery has been one of our most viewed series on the YouTube in the Hindi version. So we expect the same when we come out with the English version, right? So because we will be able to reach a wider base of learners. So let us start. And to introduce myself, I have done the candlestick learning from the boss himself. I have learned it from the Nation University, and I have done all the volumes, like 1, 2, 3, 4, all the volumes. And beyond that, also I have learned from a lot of books and a lot of texts that are available there in the market. So you can trust me with your learnings, right? So let us start, and let us first understand what candlestick is all about, right? What candlestick tells and why it is important for us to understand candlestick. So candlestick will help you to identify potential price movements based on the historical pattern. So see what happens. The basis of technical analysis, when we talk about technical analysis, when we talk about some assumptions that we use when we are using technical analysis, is that history repeats itself, right? So if you have seen a pattern historically, and there has been a reaction to that pattern historically, we expect that if the pattern comes up again in the future, the prices are again expected to react in the same way. So this is based, the whole technical analysis, every indicator, every concept, right, is based on this assumption. So of course, candlestick is also based on that assumption as well, right? So when we see a pattern, we recognize it, we catalog it, and when that pattern appears again on our charts in the future, we take actions on it based on our experience, based on our practice that we have done in the past. So when we talk about candlestick, the candlestick will entail all the crucial points of the price, right? When you talk about a price, or when you talk about a day that has ended, what you will talk about? Price has 4 points. First is the open. The price opens at the day in the morning. Then it makes a high during the day. It makes a low during the day, and then it finally closes, right? So when you are looking at a candlestick, when you are looking at a candlestick, it has the open, it has the close, it has the highs, and it has the lows. It has all the components that is required for you to analyze the price, and it is formed on all time frame, right, from 1 minute to 1 year, right? So you can find the candlestick on all the time frames, right? So with this four data, right, with this four data, we can find a price, right? We can see a price taking shape when I speak to you, or when I converse with you, and when I say that the price opened at 20, it made a high at 25, and it closed at 18, and it made a low of 16, right? So when we look at these numbers are just random for us. We cannot make out anything, right? Or even if we can make out anything, it becomes difficult for us to understand what the price has actually done on that day, right? What the traders were actually doing on that day, how they have reacted to certain market conditions on that day. But when I draw a candlestick out of this data, it will be very easy for you to understand the emotional state of the market on that day, that have driven the trading decisions of the traders on that day. But right now, I'm trying to simplify the price action in the form of a drawing, right? Whenever you see something in a form of a drawing, or in form of a diagram, it becomes very easy to decipher right? I have just shown you with a simple example that I have just given you some numbers that price opened at a certain point, closed at a certain point, and when you draw that, it becomes very simple for us to understand what the price have actually done. Now, when you look at a candlestick, it has certain components, right? First of all, there are upper shadows, right? First of all, there are upper shadows. There are lower shadows in the candlestick. There is a real body. So a candlestick is comprised of two things. First is the shadows, and second is the real body. Okay, so this is called the real body, and this is called the shadows. So the real body tells us about the range of the day. Range means where the prices have opened and where the prices have actually closed. So when the close is less than the open, when the close is less than the open, we have a red candle or we have a black candle in some cases. Okay, it is dependent on the configuration of your software, whatever software you are using. So when we have the close which is less than the open, that means sellers have been dominant on that day, selling has taken place on that day, and the candle body's color turns red. So when we have close greater than the open price, okay, then at that time the candle, the range of the candle or the body of the candle will turn green, and it will also turn white in some cases, right? You can configure that in your software. Some people will use pink, some people will use red, some will use green, whatever you are comfortable with, right? So this tells us that the price closed above the open, right? So this tells you that there was buying on that day, or maybe there was some sort of bullish sentiment on that day. Now, the wider the body, the greater the sentiment. So if I tell you that, suppose we are just talking about the real bodies right now, right? This is the real body, this is open, and this is close, right? So you can see the real body is narrow. Now, though the price closed positive, right? This real body will be green. Though the price closed positive, we didn't see much activity on that day. So we have a positive close with lower activities. Now let me draw another candle, and this is a white candle, right? This is open and this is close. Now we see the range of the body is wider. Range of the body is wider, which means that a lot of activity has taken place on that day. A lot of people have bought in, right? A lot of people were trading on the long side, and this resulted into a strength, and the prices closed above the open. Now, the range of the body is also important when we do our candlestick analysis, right? So one by one, as we move ahead, we will do it. So the upper wick of the candle tells us where the prices made the high for the day or for the session, and the lower wick tells us where the prices actually made the low for the session. So these are the four components of a candlestick, and when we merge all the four components, we get a 3D diagram of the price action on a particular day, right? So this is how you have to approach the candlestick. Name nomenclature is not important. I have been insisting on the same from a very long time, that we shouldn't run behind learning the names. There are 400, 500 type of candlestick patterns that have been recognized and that has been cataloged. So it's not possible for us to remember the name of every candlestick pattern. If we understand what's going on in the background, right, it will be very simple for us to break down the price structure or break down or understand the price structure. So the name is not important, right? And I will show you. I will show you as we move ahead that reading only the price action will be sufficient, and the name actually doesn't matter. So first we will discuss about long body candles, right? The long body candles. So now what you can see, this is a green long body candle, and as I told you that a long body candle which is green, which indicates that the close is greater than the open, and when the body is long, the range is long, that means that strong price action have taken place and strong buying has emerged on the same day, right? So the wide range between open and the close price, right? When a long green body is formed, there is a wide range between the open and the close price, and this tells us that strong price action have taken place on that day, and it has almost closed near the highs. Now try to understand what has happened on this day, right? Now let us go behind the psychology. The price opened here, and full on we had buying. People were just buying, and the buying pressure was so strong that the price almost closed at the highs, or near the highs. In this case, this is the high. So what does this tells us? This tells us that during the day there was a strong buying pressure, right? First, how we can say that there was a buying pressure? Because we have a green candlestick. And how we can say there was a strong buying pressure? Because the main body of the candle is wide, and it almost closed near the highs or at the highs. So this tells us that there was strong buying pressure the whole day. Now look at this candle. Now let us come to the charts and start looking. Look at this candle. What do you see? There is a strong wide body, and strong wide body with a green color. That means the price is opened at this point and price is closed at this point, and the whole day buying took place. There were buyers active the whole day, right? And then you can see what the follow-up looks like. So what actually happened, that there was a downtrend, right? There was a downtrend. You can see that the prices are making lower top, lower bottoms, and they were progressing down. And suddenly we see that some sort of interest has emerged. Now what has caused this interest? We are not concerned about it. What has happened? There may be some management change, there may be some new product launch, or there may be some some good news in the company. We are not concerned with that. We are concerned about what the price action is telling us. The price action is telling us that there may be some positive news. Okay, now what we have to do? We have to wait, right? We have to wait for the close, and when the price is closed, we got an understanding that yes, there is a strong buying pressure. There has been a sentiment change because this trend was down, people were selling, and somehow the sentiment got changed, and now the people are buying. And when the people are buying, and who are these people? Who are these people? These are not retail traders like you and me who have limited capital. These are big guys, right, who have unlimited capital, unlimited resources, unlimited information, and everything else, right? So they bought, and when they will buy, this trend will not be for one day or 1 month or something like that. This will be a secular trend, strong trend. So once we identify that there has been buying, right, on this day, we can assume that there will be a follow-up buying. So what this candle tells us, it tells us that there is a strong buying that has emerged on this day. Now, long red bearish candle. Now, we have discussed so much about the wide range candles. We have discussed so much about open and the close. You can easily figure out what these candles tell you. Whenever you see a candle chart, right? Whenever you see a candle chart, whenever you start analyzing the price, first go and try to analyze where the price is opened and where it closed, right? When you can make out the open and the close, right, you will be able to make out what has really happened on that day. So the price opened at this point, and then as soon as the price opened, the bears took over, and there was a lot of selling. The whole day there was selling, and like sellers were relentlessly selling everything they had, and the selling was so hard that the close was almost near the lows for the day. This is a strong selling. This is a wide range candle and red wide range candle. The first we will see this is a wide range candle, right? That means a lot of activity has taken place. Now what has happened? The close is below the open. That means a lot of selling activity has taken place. Now what is the name of this candle? It doesn't concern to us. I am again repeating the same thing because we are very much fascinated by understanding and by naming. We want to know the name, right? Tell me the name of the candle, sir. Tell me the name of the pattern. Array, you don't need to understand, or you don't need to know the name of the pattern, or you don't need to know the name of the candle. What you need to know is that why this candle has formed and what you have to do. That's it. All right. So this, now we can make out what has happened on this day. Of course, selling has taken place. There's the wide range candle, strong selling has taken place. Now look at this. What actually happened on this day? Now you can make this out, right? The prices opened at this point, whole day selling took place, the prices closed at this point, and this is the low. Now you can see the prices almost closed at the low, and then you can see the follow-up action, what really happened, right? So this is how you will understand, and this is how you will decipher the candlestick in relation to the trend. So this is the first class, so let us take time to absorb everything very, very slowly. As we will go forward, like we will have like at least 8 to 10 classes on candlestick, and I can promise you by the end of the 10th class you will be expert in candlestick. That is my promise to you, right? So now for people who are very much enticed with knowing the name, we will start naming the candlestick patterns. But before naming the candlestick patterns, I will discuss what the candlestick patterns is actually telling you, right? And why this name has been given. So what we can see that there was a downtrend, right? There was downtrend, there was persistent selling, and we can see during all the candles, you can see that the close was, lower than the open. The close was lower than the open. Now then suddenly something happened, right? Suddenly there may be some news, or the correction may have come to an end. There is a support here, right? There may be a moving average support, there may be a Fibonacci support, whatever, right? Suddenly something has happened and a big wide green candle has appeared. Now what this big wide green candle will tell you? That first of all, what you will see, where the open is and where the close is. So we know that the close is greater than the open, and then we will see the range. We know that this is a wide range candle. So that means strong buying has taken place on that day. Now what this strong buying is doing, this buying is so strong that it has almost dissolved previous day's selling. It has almost dissolved previous day's selling. So this buying was very, very strong, and it dissolved and it engulfed previous day's selling. That's why this candlestick is named as bullish engulfing pattern, right? So see, did you even require to understand the name, or just understanding the price pattern is sufficient? We know that understanding the price pattern is sufficient, because what we have to do, we have to understand what is happening in the background, what is taking place in the background, what the traders, what the big players are doing in the background. They are actually trying to buy. They are actually trying to dominate the sellers. And how they are dominating? They are dominating by making big buying, big purchases, and which are like even stronger than the sellers in the past. So this is called a bullish engulfing pattern. Now look at this. There was this trend was moving down, this trend was trending down, right? Now notice one thing, this is very, very important, right? When we will do the price action class in the future, we will focus upon this thing, right? Look at this. This was a strong red candle, this was a strong red candle, this was a strong red candle, and then the size of the candle started to shrink. That means what? The sellers are already getting weak. The sellers are already getting weak. This last red candle was very, very small. See the range of the candle? It is a very narrow range candle. That means the selling pressure, which was dominant here, actually dried out. It's no more dominant here. And then when the sellers became weak, like they got weaker, a big wide range green candle appears, and this green candle is so strong that it has engulfed the previous day's selling action. Now you can just look at the price action, right? This was the open and this was the close, this was the high and this was the low, and what this has done, it has engulfed the previous day's weaker price action, selling price action, and then you can see what actually resulted was a strong trend on the upside. So this is an indication that this wide range candle is a strong wide range candle because it almost engulfed the previous sellers. Now again, there are many things that you have to consider when you are reading this candle, where it appears, right? The context of the trend, the context of the overall market, everything has to be considered. That we will, of course, look at when we will move forward, right? Now, the opposite of the bull engulfing candle is the bear engulfing candle, just opposite, right? You can see the prices were advancing very strongly, okay, and suddenly a wide range candle appears which closed below its open. Now, two things, right? Wide range candle and the wide range candle closed below its open. That means there is a big, huge selling pressure that has appeared on that day. Now, why it appeared, we are least concerned. What it is doing, we have to be concerned with that, right? Now, what it did, it actually engulfed the last day's buyers. Now, you should notice one more thing, that as I am drawing this candle, the bullish candle, you can see that the price action is shrinking on its way up. That means as the price action is moving up, it is losing some of its bullish momentum. And when the bullish momentum gets weaker, a strong bearish candle appears, right? Now, just let us play something. Like, suppose there is 100% bullish momentum in this candle. Now, as it moves up, some bullish momentum is lost. Now, there is like say 70% bullish momentum. Now, there is 60% bullish momentum, and at this point there is 30% bullish momentum. Now, what happens with this candle? There is 100% bearish momentum, right? You can compare this and this. Now, if the bearish momentum is stronger than the bullish momentum, of course, the bears will take over. There will be selling for a number of days or for a number of period, and this is why it is very important to understand the candlestick that is preceding the engulfing candle. That we will discuss in the advanced stage. I'm just giving you an idea that what you may be, what you should be looking forward. This is not just a normal candlestick class that you generally visit or that you generally see on a YouTube, right? So this is a bear engulfing pattern. Now let us see the same on the chart. Now you can see, look, I have look at the bullish candle that is preceding the bear candles. Look at the bear candles. Look at the range of the candle. Look at the reaction that takes place post these type of candles appear. So these are called bear engulfing candle. They are engulfing the previous day's price action. They are engulfing the whole previous day's price action. They are engulfing the bulls that were trying to make their way on the day before. So this is called bearish engulfing pattern, right? Bearish engulfing pattern. Why they are formed, I have already discussed, right? So we are more concerned about what they will do. Now, again, there is another pattern called the piercing pattern. Do not worry about the name. Just try to understand the price action. Like, just let us read these two candles, these two last candles, right? Now, look at the first candle. What is the first candle? What does this tells you? This tells you that there were strong selling, right? The price is opened at this point, the price is closed at this point, and the range of the candle was also wide. That means real strong selling was taking place, of course. Now, look at the second day, what happened. Now, try to understand and try to read between the lines. What really happened? The price really actually opened below the previous day's close. The price actually opened below the previous day's close, and all the bear people who were carrying shorts were very happy, right? The guy who actually sold here, and the guy who have been like holding their shorts, and the guys who have been adding their shorts on this point and this point, they would have been very happy when they saw initially the prices opening below the yesterday's close. Now, somehow the bulls came back, and they came back very, very strong, and they started driving the price up. Now, when these people, these sellers, these bears, when they saw that the prices aren't holding, right, holding the bearish sentiment, they are not now descending anymore. Now they started to get nervous, and when they see that the prices are now getting above the yesterday's close, now this nervousness comes to the peak, and they start thinking about protecting their profits, protecting their gains. And what they will do, they will start booking their shorts. Now when they will start booking their shorts, of course they have to buy. The buying power will emerge. There is already some buyers push at this point, which have pushed the price below yesterday's open, or above yesterday's close. So again there is some buying pressure here, right? So we already have buying pressure from two parties. Now there may be another guy who is sitting outside and watching, who is not either a bearish party, not either a bullish party as of now. He is just sitting outside and he is watching the game. Now he sees that suddenly there is a buying pressure. Suddenly he sees that the bulls are taking over. Then what he will do? He will also come and join the party. Now we will have very, very strong buying pressure at this point. And now this buying pressure, what it will do? It will push the price. It will push the day's price. It will push the price action above the last bearish candle's midpoint. The last bearish candle's midpoint. So the buying pressure here is so strong that it has pushed the price above the midpoint of the last bearish candle. Strong buying pressure. Though it opened low than the previous close, the reaction was very, very strong. Now this pattern, now you can just understand by looking at the price action, by deciphering the price, by deciphering the pattern, that what has really gone behind the creation of this pattern. Now this pattern is called the piercing pattern. As simple as that. And it has a potential to turn this downtrending move into an uptrending move, provided it appears at the right price, right place. And we'll cover that. Right. So this is called the piercing pattern. Now, do you even require to remember the name? No. We are only concerned with what this pattern is doing, where it is doing. What and where, both are important. Now, right now, since it is our first session, we are more concerned on what it is doing. We'll come to the where part. Just stay with us. Right. Now, next, again you can see this. There were 2 down days. Strong selling was taking place, and suddenly you can see that strong buying emerges. And this candle is so strong that it has closed above the halfway, above the midpoint of the bearish candle. And then you can see the reaction, very, very strong reaction that stayed for a couple of sessions. So this is the piercing pattern. This is called the piercing pattern. Again, what is in the name? You need to understand how the price action is working, right? Now the reverse of the piercing pattern is the dark cloud cover. Now, what you have to do, just have a look at this drawing and just try to understand, and just try to imagine by yourself, just try to analyze by yourself what has really happened on this day. Okay, the previous day was very, very bullish, right? It opened here and it closed here. So the previous day was very, very bullish. Everyone was very, very happy. All the buyers were happy, right? People who bought here were very happy. The people who even bought here were happy. The next day, something happened. Maybe something happened overnight. I don't know. Bad earnings, some bad news, some bombing over any place globally. Something has happened. Now, what you have to do, you have to look at the price, you have to look at the sequence, you have to look at the formation, and you should try by yourself and try to understand, try to figure out what's happening, right? So look at the series of candles, right? Very, very strong green candles, which tells you that the price action was very, very strong, and lot of buying was not taking place in this stock or whatever it is. So when this candle was formed, like all the bulls here was happy. Even the bull, even the guy who has bought at this candle was also happy, because the price almost closed at the highs and the trend was up. The next day, price opened higher. Price opened higher and there was a euphoria, right? Many people who were even sitting outside, right, they also came and joined this party to buy because it opened high, right? But somehow there was something that started pushing the price down, and this push down was so strong that the price almost closed at the lows. You can see wide range body and the close is below the open. That means strong selling has taken place. Now, what will be the sentiment, or what will be the psychological impact on the guy who have bought on this day, on the guy who have bought on this day, when the prices opened from, like, opened high from last day's close? What will be the psychological impact on this guy who have bought here and already holding? What will be the psychological impact on this guy who have bought here and is already holding? What they will do? They will all start and they will all rush to sell. This guy will sell because his stop loss is hit. This guy will sell because his stop loss is hit. These guys will sell because they want to protect their ongoing profits. So there will be lot of selling pressure, right? And even there will be guys who are sitting outside the ground and watching the game. Now they see that the sellers are getting dominant, so they will also join the sellers party. And now this point, right, will have a huge selling pressure. And the selling pressure is so strong that it almost closed halfway, midway below the yesterday's candle. This means that there was strong selling, almost like a bloodbath day. So this is called the dark cloud cover. Okay. So do we really know what's going on behind the price? And do we really require to understand, or do we really require to by heart the name? No. It's just understanding the price action, what it is doing. Now look at this. Very strong price pattern, right? What would have happened on this day? Just try to imagine. What would have happened on this day? Strong buying has taken place, strong buying. And even if you look at this thing, it has closed above the resistance, right? Strong buying has taken place, the price is closed above the resistance. Everybody is very happy that yes, the price is gonna go to the moon, and somehow something happens, a big red candle appears. Though it has opened above the previous day's close and even made an high above the previous day's high. Just think about the emotion of the players who have been caught here, who have bought here. And those who have bought here are of course caught at the wrong place. And then you can see what happens. See the reaction of this move. So this, which people were anticipating as a break of the resistance, has turned out to be a trap. And look at the price reaction, very strong reaction. So this is basically the dark cloud cover. All right. This is just the first and the introductory class. Then we have small body candles. Now, what is small body candles? We have been talking about large body candles. We have been talking about body candles with wide range, right? And we know that candles with wide range, wide body have a bigger impact, have a greater impact. Some type of decision has been made, some type of buying and selling, serious buying and selling has taken place. Now, what about the small bodies? What does a small body tell us? Right? So the small body candle is like for the first candle that everybody will talk about, and when we talk about a small body candle, or when we talk about a candle with a very narrow range, the first name that will come to our mind is Doji always, right? So see, the Doji won't have any real body. So what is absent in this small body candle? The real body is absent, right? In all small body types, the real body will be very narrow. There will be only the shadow play. When we are talking about small body candles, the play will be the shadow play. There will be no body play. And when we talk about wide range bodies, the game is all about body play, not the shadow play, right? So at this point, we see a doji which doesn't have any sort of small body or any type of large body or any type of body in fact. So what does this mean? When there is no buying, when there is no selling, nothing is taking place. What is happening? Probably the traders are taking a break. Now everybody will say that this is an indecisive candle. There is this is an candle where no activity is taking place. You go and read any literature out there, they will classify small body candles as indecision. But I think that these small body candles are the places where big decisions are taken, because post these small body candles you get a trend. So you cannot call it an indecisive candle. These are the place where decisions are taken. These are the place where decisions are made by the smart money or by the big players, right? So look at this thing. This was a strong trend, and then suddenly a small body appeared. And look at the leg, right? High and low. And post this candle, the prices really started to move down. So do you think that the bulls have taken a break at this point? Do you think were they indecisive at this point? Actually not. They were taking some decision. Some important decision regarding the trend was made at this point. So whenever you see a doji on a candlestick chart, it is a point of importance. It is a point where you should be focused on, because post this doji or a series of doji or a series of small candle, there will be a trending move, and we should be ready to trade the trend, because most of the money is made when the price is trending, not when the price is sideways. To keep this in mind. All right. Now look at this point. What actually happened on this point? Right? Selling was taking place, like all, you can see big green, big red candles, and then you suddenly see small body candles, right? So do you think that this was an indecisive candle? Do you think that this was a candle where somebody was taking a break? No. This was the candle where actually decision was made to continue selling. So whenever you see this doji, you should be very active. You should be very ready to take an action, right? You can just create some lines which is called support or the resistance line, and then you can of course take the trade in the direction of the trend wherever it breaks, right? So when we talk about demand and supply, it is called like drop, it is called base, and then it is called drop, right? Maybe later on we will cover it. So this is doji. Now look at this, again a doji. Strong selling has been taking place in this script. Like you can see wide red candles, which indicates strong sellers, strong hands selling, and somehow a doji appears. Now what must have happened on this doji? What must have happened on this doji? The big guy who is holding a bigger chunk of this stock, or a guy who is like making up his mind to buy a bigger chunk of the stock must be ready with all his funds. And when he see the sellers have dried up, he will come and push the buying orders, and then the prices will move up. Now it has created a cup and handle pattern. Right? This is also something we will cover. So keep sharing. Right? So that we get confidence, yes, that people are watching our videos in English as well, and then we will come up with all these things for you. Right? So again, this is an Doji, which indicates that a small body candle will always indicate that something is taking place in the background, some decision has been made. We have to be ready when the decision is finalized, right? And how we will be like, how we will know whether the decision has been taken or not, or whether what decision has been taken. We will have to use the range, right? We will have to use the range of the candle to understand what decision has been taken. Once the range of the candle is broken out, now in this case you can see the range of the candle has broken out on the upside. That means a decision to buy has taken place. Now if this range of the candle would have been like broken on the downside, something like this, then it would have told us that a decision to sell has taken place. It's as simple as that. You don't have to confuse things. Alright. Now again, see what really happened. Just look at the candles and try to understand what is going behind the price. You don't need to know the name. I'm repeating it again and again. Just try to understand what's going on behind the scenes. Strong selling candles, right? Strong candles with wide range body. Like all the sellers are dominant. The candles has been opening up and closing down, opening up and closing down, and suddenly we see that there is a small body which have halted the sellers. Somehow the selling has been halted. So this means that there is some sort of decision making going on here. Some sort of decision making going on here. See, the open is above the previous day's close, and see the close is below the previous day's open. That means that something is cooking in the hindsight, and this is a very, very important candle. People will tell you, and even if you go and read the books, many will tell you that this is an irrelevant candle. This is the most relevant candle. Small body candles are the most relevant candles on the chart. Alright, I'm not interested in these big body candles, because these big body candles are like already some decisions has been made. You cannot just go and jump in between the trends. You have to wait for the big guys to stop selling or stop buying and take decision. And when they make out their decision, you are going to follow them. So this is why small body candles are very, very important, right? And this candle which appears post selling, right? Post selling, a small candle appears which is inside the bigger candle. Now this is just the opposite of engulfing patterns, which is inside the bigger candle. This is called an bullish Harami. Now why it is called a bullish Harami pattern? Because it has halted the sellers. It has halted the sellers. Now just let us go on the price chart and look at how the candles really look like. Now look at this. Strong red candles, like strong selling is taking place, and then suddenly you get a small inside candle. This is an inside candle or an inside bar, whatever you call it. It tells you that it has applied a sort of break on the sellers. Wait. Now you cannot go on like this, right? Certain type of dried up momentum, absorption of selling. Something has happened here which have absorbed the selling pressure, which have absorbed the selling power. It is just like a shock absorber, which has absorbed all the selling power. And then we have residual selling for a day or two, and then we see the prices are getting reversed. Now, as I told you, just that these small body candles are very, very important candles. You have to focus on these small body candles because you have to take a decision with the players and they take decision at this small body. Now somebody has decided that they have to buy at this small candle, then you have to follow their decision and you have also to punch your buy orders at this point, right? So this is why small body candles are very, very important. The opposite of bullish Harami is the bearish Harami, right? You can see strong momentum, strong bullish momentum was there, right? Every day buying was in force, and suddenly there was a break, right? And now this was the close, this was the open, and this candle open inside this big bullish candle, right? So this was the open and this was the close. This opened gap down. We will cover this, what is gap. And then you can see that the whole buying pressure was absorbed like a shock absorber. Whole buying pressure was absorbed. And when you see it on the chart, you will see something like this. Look at this. Strong buying pressure was taking place. And then Harami appeared, right? Actually, this is a indecent word when we speak, when we talk about the Hindi language, right? Actually, Harami means a pregnant lady in Japanese term. So, a strong buying pressure and then inside candle or Harami appears. That means it has paused this move. It has paused the sellers and then you can see the reaction. So now you can see why these small candles are very, very important and why you should be focused on small candles. You shouldn't be focused on these big candles. Always small body candles will give you money. Note this and keep it in writing. Only small body candles will make you money, not the bigger candles, right? Now friends, this is the screenshot of some of our mentees of Master Trader program. So these are the guys who have taken our Master Trader programs and you can see they have performed wonderfully in the last week. Even the markets were not that good, even though a very strong performance have been given by these mentees. Now, what is our Master Trader program? Master Trader program is our mentorship program, and it is a very detailed technical analysis program. 120 hours of learning, wherein we will deep dive into price action, momentum, market breadth, and then we have our strategy modules. So, our strategy, we follow three types of strategies. One is the short-term strategy, where we try to capture a move of 5 to 10% in a very short term. And then there is a medium term strategy where we aim to catch a move of 10 to 30% in the medium term. And then there is a long term strategy where we try to capture the move like 2x, 3x of our risk in a very, very, in a little bit longer term, like holding period is for some quarters and all. So you will be assisted with all these strategies where you will be taught, you will be coached how to find stocks where this type of strategies can be applied. We have all the scanners ready for finding these type of strategies, and you have like fortnightly meet with me wherein you can discuss your doubts, you can discuss your queries with me. And then we have a community here. In this community, we have like-minded traders. All our mentees are there, so a lot of brainstorming and a lot of learning also takes place in this community as well. So this program is for 1 year, right? You will get an access for 1 year, and you don't have to be you don't need to sit in front of the computer full time. You just need to sit when you need to do the analysis, and you just need to sit when you want to punch the order. Nowadays you can even punch the orders on the phone, right? But for learning purpose, initially you have to give like 2 to 3 hours to learn, and once you are done with the learning, then once you are done with the practice, then everything becomes very, very smooth. It takes time. It's not like that you start when you buy a program, you start earning immediately. It takes time. There is a learning curve. Every trader has to go through the curve, so you will also have to go through the curve. But the slope of the curve will vary when you have when you have a mentorship, or when you have a type of syllabus to follow, right? If you go and trade in the market randomly and haphazardly, then of course this curve will be little bit sharper and little bit longer, right? So that is what that is the difference between mentorship, learning mentorship, and self-learning, right? You are learning with the help of a mentor and learning with the with your self-help things, right? So this is a master trader program. So if you are interested, you can go to our website and you can have a look at it. The program is in Hindi and English both. We have some short programs also, but right now the short programs are only available in Hindi. So we are working behind it also. So we will soon come up with the short programs in English as well, right? So but it will take time, right? Not immediately, because first we are like in the process of releasing videos in English version on the YouTube, right? Now we will come to the shadows. So we have talked about the bodies, right? We have talked about the large bodies, we have talked about the small bodies, and now we will talk about the shadows. Friends, this is just the introductory session. Now you must be thinking that the introductory session is so long, and in the introductory session we have gone so deep. Just imagine what will happen when you will start looking at the advanced sessions, right? This is just the first session of Candlestick, the introductory session. And when you will look and when we will deep dive into advanced section, I can promise you it will blow off your mind. You wouldn't have seen Candlestick like this in your whole trading career. You wouldn't have read about Candlestick like this. Alright. So now we'll talk about long shadows. Now what the shadow tells us, right? What the shadows tells us? The shadow will tell us that some type of strength or some type of volatility or some type of rejection has taken place. Either it can be rejecting the bulls, either it can be rejecting the bears, or either it can reject both of them. So basically, a shadow displays strength, displays power, and when we add the body to it, right? When we add a body to it, it makes more sense, right? If we have a small body above a long shadow, that has a different meaning. If we have a small body below the long shadow, it will have a different meaning. If we have a small body in between the long shadows, this will have a different meaning. So we will come over it. Now just look at this pattern and try to imagine what has happened, right? First you have to mark the open, low, close and high. Just in one glance, first just start marking the open, the low, the close and the high, right? Now what has happened on this day? Just try to imagine. Once you learn this, you will never require to go and see the pattern again and again, to go and refer the book, to go and refer the video again and again. Once you practice like this, right? So this is the open, and we see when the price open, there was selling. People started selling and it dragged the price down to a lower levels. But something happened at this lower level. There were a lot of buyers sitting here, and they started to push the price up again. And the push was so strong that the price closed above the open. Now what really happened? Just look at this. Something like this has happened. The price opened, selling took place, selling started, and then again price went up and it closed above its open. So this is the background of what has really happened at this point. This is a break of a swing high, a sort of swing high. This is a breakout type of candle, right? So this is a strong candle. This is a strong bullish candle. It tells you that there has been strong buying. The sentiment has been very strong. The sellers were like trapped. The sellers were hammered, basically. That's why we call it an hammer. It looks like an hammer. The Thor's hammer, right? So this indicates that a lot of selling has taken place. A lot of buying has taken place. People have bought in. So again, this is an hammer. The nomenclature is not important. The pattern is important. Look at this point. What really happened, right? There were dominant selling. and then there was some rejection, and then you can see what, now you can see that real buying has taken place at this point, because the lower levels were rejected. The lower levels were rejected again and again. There was someone who was sitting here ready to buy. There was someone who was hammering down the sellers. There was someone who were rejecting, absorbing their every order, and then this reaction took place. Next, the opposite of hammer is called the shooting star. Now, as I told you, whenever you see a candle, just immediately try to imagine where is the open, close, low and high, right? So this was the open, this was the close, and this was the high. Now, what would have happened on this day? Just try to imagine. The prices opened here and then the prices went up. Strong buying took place. Somehow, the buyers were not strong enough against the sellers who were sitting here, and then the prices started to come down and it closed from where it actually opened. So this is something that has happened at this place. Pure selling, strong rejection by the sellers. The sellers are not ready to buy. The sellers are not ready to accept what the buyers are doing. Strong rejection, right? Strong rejection. And this is called the shooting star. Let us look at this pattern on the chart. Just have a look at this. Strong rejection, multiple rejections, right? Every attempt to break this point is being fouled. Every attempt by the buyers has been overshadowed by the sellers. And then you can see the price reaction. This is called the shooting star. Right? Inverted hammer. Now let us come to another pattern that is called the inverted hammer. Now the inverted hammer is a type of modified, type of modified Harami, right? So what we see that a lot of selling has been taking place at this point, at this point, and this point, and then on the next day or in the next session, the prices did open somewhere here, right? This was the open. The prices did open gap down, and then it made an attempt to move up, right? And then it came and closed above the open, right? This was the close. So something like this, the prices opened, moved up, and then it closed here, open and close, right? So it did close above the open. So why this pattern is important? The first thing is that there was an attempt to move up. After a lot of selling, there was an attempt to move up. Secondly, there was a positive close above the open after a long time, like after 2-3 sessions. So is this a strong bullish indication? No, it's not a strong bullish indication. It just tells us that the momentum, the seller's momentum may start fading out here. This is an initial signature of the momentum failing out. And then post reading the price action, we can analyze whether the prices will go up or it will come down, right? But this candle tells you that there has been some sort of momentum loss in the trend, right? So look at this strong move down, right? And then you get an inverted hammer. Now what this inverted hammer is telling you, that there is a loss in momentum. It doesn't tell you that the trend will change immediately. Now when you see this, there is a loss in momentum, right? And then you can see that the prices went into a sideways zone and then started to move up. So it broke the momentum of the sellers, right? It broke the acceleration of the sellers actually. This is inverted hammer, nothing else. Same is with the hanging man. Same is with the hanging man. Now just try to imagine yourself, run your brains, run your imaginations and try to understand and try to figure out what this is telling you. What this pattern actually means. Right? Now let me take you to the chart. Now you can see what has really happened. Right? strong green candles were there, strong buying was taking place, and then we got an hammer. Now it indicates that there is some sort of the first crack. Basically, it is a type of crack in the momentum because the prices went down. You didn't have a solid candle, right? Didn't have a solid candle, a solid green candle. A solid green candle would have indicated that the buying was started here and it ended here. But this indicates that though the buying was started here, there was some sort of initial selling and then it moved up. So this indicates that there is a sort of momentum loss, because if this pattern would have appeared here, now look at this. It is the same pattern, right? But the place of its appearance changes the whole analysis. You cannot call it a hammer. We will discuss it very, very deeply as we go ahead. So it just broke the momentum. It just broke the momentum of the bulls that was generated here. And then you can see that the price went sideways for some time and then it started to correct. It's just a momentum loss, right? And then we have windows. Windows means gaps, and these windows will act as a support. Now this is an rising window. This is an rising window. This is a rising gap. Basically, this is a vacuum between the two price action, right? So it acts as a support. So the prices opened here and closed here. The next day the buying was so strong that there was no overlap, right? And the prices opened here and closed here. So this point has a very, very strong emotional significance, and so it will act as a support. This is called a rising window, where the window is made in an uptrend, and the opposite of the same is a falling window. Now this falling window will act as a resistance. Whenever the prices will approach here, there will be some sort of selling pressure. Now why this window is important and why this has a selling pressure, or why the rising window has a buying pressure, right? Now just imagine that there were people who were willing to sell at this point. There were people who were willing to sell at this point. There were people who are trapped at this point. Now what they would do when the prices will come again at this point? They have a memory. They have a memory that at this point, from this point, the prices went down very, very sharply. At this point, something has happened which have changed the trend, or even which have accelerated the trend on the downside. So they will take this opportunity to get out of the market, and then selling will come and it will again push the price down. So this is a very, very important formation, one of the most powerful formations when we talk about candlesticks. Now look at this, a rising window. Now something has happened overnight, some news, some good news in the company, some management change, new product, whatever it is. So a lot of the people would have been like waiting at this point to buy. They have a memory that at this point, right, at 2200, something happened in the company, and they will wait for the prices to come down to 2200 again. And since they have a memory, they will start buying it here, and you will see an uptrend. So the windows are just the memories. Look at this point, a down window. Look at this point, a down window. They have a memory. It will act as a resistance for a very, very long time. Right. So this is just an introductory class, and as I have told you, this is the first class, and we will talk about candlestick in depth. Right. Now see what has happened. This is an opening window. Price gapped up, strong gap up, strong buying has taken place. Now there were many people who would have wondered कि अगर यहाँ खरीद लेता, if I would have bought here, no, the prices I would have been in profit. So when the prices will come here again at this point, all these boys or all these girls and all these people who have missed their entries would have actually buy here. They will of course buy here, and then you can see that the prices will start rushing up. it acts as a very strong support. It acts as a very strong support. Now look at this. Price has a memory, and this is how it proves it, right? Support, resistance, they are all an example of the price having a memory. Guys, thank you for attending the session, and I think that the session was quite informative for you, and you have of course learnt something new. It got little bit extended, but what I feel that learning is more important than anything else. So I think that you have learnt a lot, and so if you have really liked the initiative, do tell us like in the comment box. Do subscribe to the channel, do share the channels with your friends, and we will come up with many topics that have been covered in our channel in Hindi language. We'll try to cover all those topics in English as well, so that we do not have any barrier as of now. And if you have really liked it, if you have really enjoyed it, do subscribe to our channel, do share it with your friends. So keep earning, keep learning, keep sharing. Jai Hind, Jai Bharat, and stay safe.